Hi guys, here we go. We're at our last chapter, chapter 16. And again, we talked about the four functions of management are planning, organizing, leading, and controlling. And this is the chapter that we talk about controlling. So essentially, control is what you do as a manager to get things done. And this is to show you what controlling is in relation to the other management functions. So basically, controlling is making sure that what we're doing is matching what we want to do. So why do we have to have control? Because it helps us to adapt to change and uncertainty. We know that there's always going to be uncertainty going on. We want to be able to make sure we can address any kind of irregularity or errors that are occurring. It reduces costs, it increases productivity, and adds value, without doubt. It's an opportunity to detect some opportunities. It helps you deal with complexity, and it's decentralizes decision making, and it facilitates teamwork. So it's not, it's something that's a shared activity. Okay, so let's take a look at the steps of the control process. Again, this is right from the book. Establish the standards, measure the performance, compare the performance to the standards, and then take any corrective action if necessary. So we're going to go through them. So what's the desired performance level? It's you want to make sure that it's easiest to measure them when it's quantifiable, means in numbers. You measure the performance, so you look at written reports and that kind of thing. Oral reports, observations. You compare performance standards. So this idea of management by exception is it's a control principle that says that managers should be informed of a situation only if data shows a significant deviation from standards. So only if there's something to report. And then you take corrective actions if necessary. Maybe you have to maybe there's no changes, or maybe you reinforce positive performance, or you take action to correct negative performance. Okay, so there's a couple of different levels of control. There's strategic control, that making sure that you're going, you talked about the strategy that you're going to make. Maybe it's, it's a aggressive strategy, or, whatever your long-term strategy is, and, improving sales, becoming more aggressive in your industry, that kind of thing. So that's strategic control, and tactical control is actual performance that's going on. There is also operational control, that the day-to-day goals are being met, and then again taking corrective action if needed. There are 6 areas of control: the physical plant, human resources, information sharing, financial reports, structural, and cultural. Those are all areas you want to look at. So a structural area would be bureaucratic control, is that use lots of rules and regulations, as opposed to decentralized, that it's much more informal and organic. People are empowered to make decisions. Also very popular is this idea of the scorecard, and you can look at different indicators. Different industries are going to have define these in different ways. But how satisfied are customers? And you want to determine how you're going to measure that. Internal processes, the effectiveness of them, kind of any innovation that you're trying to or improvements that you're trying to make in your processes and your procedures, and then financial measures. How are the numbers coming in? So again, this is the an example of the balanced scorecard. So financial perspective. How do we look to shareholders, customer? How do customers see us? Innovation and learning. Can we continue to improve and create value? And then internal business perspective. In terms of what do we need to excel at? So again, for the financial, our profitability, growth, shareholder values. Customer service levels, internal businesses, employee skills, quality. We've talked about quality more, productivity. Are we producing as much as we need? And then are our employees learning new skills and developing new behaviors. Okay, so with the strategy map, it's a visual representation. People like to have visuals. The 4 perspectives of the balanced scorecard. It helps managers to communicate their goals so that everyone in the company can understand how their jobs are linked to the overall objectives of the organization. Again, it's sometimes things are communicated better visually than through maps and charts. A copy of the strategy map is in the book. Okay, so there's budgets, which are informal financial projections. And, in the beginning of the year, you don't necessarily know exactly what's going to be happening, but you need to come up with some sort of general roadmap that you're going to look at. And there's incremental budgeting, which is using the last budget period to use as a reference point, and then, only incremental changes are looked at. Okay, and there are fixed versus variable budget. Fixed budgets allocate resources on the basis of a single estimate of cost. Variable budgets look at a various proportion with different levels of activity. Okay, so this is, we covered this, and you probably covered some of these things in your accounting and your finance classes, but there's a variety of different financial statements we look at. Again, that they're produced at various times throughout the year. The balance sheet looks at the assets and the liabilities. And determine at a specific point in time, it's a snapshot. And so assets equal liabilities plus owner's equity, and they need to be equal. The income statement summarizes the financial results, the revenues and expenses over a specific period of time. Again, these are all things that people in accounting and finance work on a daily basis. Ratio analysis, again, these are also things that you learned about in accounting and finance. Those liquidity ratios, how quickly things can be turned into cash, debt ratio, how quickly can a firm meet its financial obligations, and then return ratios, how effective management is at generating a return or a profit. Okay, also companies, organizations, be them for-profit or not-for-profit companies, go through audits. It's a formal verification to make sure that any financial information is accurate. And there are external ones that are done by outside people and internal ones that are done by the organization's own staff. It's best really to have both, particularly that external audit, because they don't have they're done without bias, and they often might have information and ideas and techniques that internally we might not be aware of. Okay, the Deming Method. The Deming Method is this guy whose first name is totally escaping me right now, Edwards Deming. He came up with a method called Total Quality Management, and it's very customer focused. He started out in the 40s and the 50s. He tried to encourage the U.S. manufacturing markets to adopt it, and they were hesitant to, and then he went over actually and brought it to Japan, and thus was the birth of places like Honda and Sony, and then the U.S. manufacturers started to take notice of it, and it came back over here. But it's this idea of focusing on the needs of the customer. It's continuous improvement, and that if you have continuous improvement, you are going to have an improved quality, and that's going to increase market share, prospects, employment, income, that kind of thing. And that quality can be improved by this idea of the PDCA cycle, which we're going to look at in the next chart. So plan, do, check, act. So you want to plan what you want to have happen, do it, check it, and then determine what lessons have been learned and how you can improve on that. That's the PDCA cycle. All right, so total quality management, TQM. Again, as I said, Edwards Deming is the father of that movement. It's led by top management and supported throughout the organization. It's dedicated to continuous improvement, continuous quality improvement, training, and customer satisfaction. It's led by top management, but it's the idea of getting information from the bottom up. So the core principles are people orientation. Everyone involved in the organization should focus on delivering value to customers. and that you all work on it together. And then also this whole idea, as I said, of continuous improvement. Okay, so people orientation. So delivering customer value is most important. They also talk in total quality management about the internal customer and the external customer, that even department to department, you can have customers within the organization. The customers aren't just outside of the organization. So if you're, for example, an internal customer might be the finance department or the accounting department, and the responsibility is to get them information to do their reports. Marketing needs to get them the information to do the reports. HR needs to get them information to do reports. So if people feel empowered, they'll focus more on quality, and that in order to have total quality management, you have to have training, teamwork, and cross-functional efforts. This idea that all departments are working together. So, one of the main tenets is that it's less expensive to do it right the first time, and it's better to do small improvements all the time than, maybe just revamping, every once in a while. Accurate standards have to be followed to eliminate small variations. This is mostly true in manufacturing, but can be applied to a variety of different businesses. And again, I can't really emphasize enough the importance of top-down commitment to the process. Okay, so applying total quality management to services, there's the rater scale. It enables customers to rate the quality of a service along 5 dimensions: reliability, assurance, tangibles, empathy, and responsiveness. So reliability, the ability to perform the desired service dependably, accurately, and consistently. Assurance is employees' knowledge, courtesy, and ability to convey trust and confidence. Tangibles are physical facilities, equipment, and appearance of personnel. You want to make sure, if you're in a service organization, restaurants, beauty salons, that kind of thing, that people look good. Or, hotels, all of those would be considered services. Empathy, provision of caring, individualized attention to customers. That we've talked about the importance of empathy before. And responsiveness, a willingness to provide prompt service and help customers. So there are a variety of different total quality management techniques. Outsourcing, the idea of, finding people who are experts in their field. Let's say you do run a small business, and finding someone in your field who, an accountant, for example, should do the work for you. Reduced cycle time, making sure that you can, move things through more quickly. ISO 9000 and 14000 series is also a part of TQM. Statistical process control is something that is used in TQM, keeping track of, number, like airlines, for example, number of times you're late, or number of defects in a piece of machinery, or, number of meals that were sent back in a restaurant, that kind of thing. And then Six Sigma and Lean Six Sigma are also techniques that are outsourced of total quality management. Okay, so keys to successful control systems. They have to be strategic and results-oriented. This is not too different from what we're talking about with plans and goals. So that you want to make sure that the control systems are timely, accurate, and objective, realistic and positive, and understandable, and encourage self-control, and that you maintain some level of flexibility. So barriers to control success. Barriers to control success is too much control, micromanaging, not enough employee participation. Again, it's important that everybody in the organization be committed to it. Overemphasis on how you're doing it, not why you're doing it. Too much paperwork, and focusing too much on one methodology as opposed to looking at a variety of different methodologies, and being open to the very different approaches to solving a problem. Okay, so this is all we talked about: outputs and inputs. This is really just kind of a quick little chart. Productivity is important because it determines whether a company will make a profit, and it also affects a country's standard of living. So you want to look at productivity equals outputs divided by the inputs, or goods and services over labor, capital, materials, and energy. So the inputs would be labor, capital, materials, and energy. So how much based on what you're getting in, are you getting something, again, you're getting a fair shake out. So managing for productivity and results. So as a manager, you need to operate in a complex environment and looking at competitive advantage, diversity, globalization, all these things in the external environment, information technology, ethical standards, sustainability, and your happiness and life goals. If you remember, we talked about all these things in the beginning. And you have to make decisions about the four management functions: planning, organizing, leading, and controlling. And that's to achieve productivity and the hoped for results. Okay, so what's the role of information technology? It's this idea of enterprise resource planning, ERP, software systems, information systems for integrating all aspects of a business. It's this way we talked about, helps managers stay on top of the latest developments. We talked about big data earlier. Big data is a big portion of it, trying to keep track of all the information that we have at our disposal to continually improve our operations and also help our employees and serve our customers as best they can. Okay, so that wraps up the idea of total quality management and controlling. And now I just want to briefly talk about this whole idea of your own managerial success. And these are things, again, we've talked about earlier in the semester. It's important that you find your passion and you follow it. What is it that you're most interested in? If you love music, pursue a career somehow in the music field. Encourage self-discovery and be realistic. So constantly try to find out new things about yourself, but also maintain a level of realism in what's going on in society as a whole and how it's going to fit in. Be flexible, because every situation is different. And always be fine-tuning your people skills. It's people with good interpersonal skills are usually the ones that advance most quickly in organizations. Also learn how to develop leadership skills. And back to the interpersonal skill, we talked about leadership skills back in the previous chapter. And treat people as if they matter, because people do, and we've talked about that before, that the human resources are perhaps the biggest resource any organization has. Draw employees and peers into your management process, this idea of participative management, team building, and work groups and work teams, that kind of thing. And then be flexible. Keep your cool and take yourself lightly. Take your work seriously, but don't take yourself too seriously, because no one wants to be someone who has this overinflated ego where thinks everything they do is the most important or the most significant or whatever it may be. So anyway, so that's the class, guys, in management. These last two slides I think are important to look at. There's many important things we've talked about, but ultimately you do want to make sure that you're managing yourself for your own happiness and your own career. No one else is going to do it for you, and it's important that we all want to reach that highest level of Maslow's need hierarchy of self-actualization. And these two slides, this one and the previous one, if you follow them, hopefully will get you there. Okay, thanks. I hope you enjoyed the class. And if you have any questions, you know how to find me. Thanks, guys.